Hello everybody, I'm Mustafa and here is a Persian Trade History YouTube channel. Welcome. And we are going to have our weekly review on US dollar index, on Euro USD, gold and Bitcoin perhaps. So let's start with US dollar index. I use smart money concepts for the technical analysis of the charts and I'm trying to find out a scenario or couple of scenarios for the coming week. Therefore, to start, as a basic rule, I always look at US dollar index. And this is the weekly chart of the US dollar index. You can see that there has been a big rally in US index and then we had a drop. And that drop has come to the discount zone. Here is the equilibrium and this is like 71%. What do you see here? This blue one. This is a like daily opening gap, but it was so big that I can't ignore it. This daily opening gap between 5th of November 2024 and 6th of November 2024. It is so big that I can't ignore it. The other two rectangles that you see here, this little one and this one, these are the closest weekly opening gaps. Depending on where the price is right now, a weekly opening gap above it and below it, right? So you see that here we had a high, we had a low, which is a lower low, right? And we have got to this area, which is 71% retracement of the big rally. So everything is pretty, ready to start another rally. However, there are points here. Let's get back to weekly. In the weekly, and when the price has come down this much, right, and there is untouched fair value gaps here, you see the area between the high of this candle and the low of this candle, and another fair value gap, high of this candle and low of this candle, plus this one, which is absolutely important to me. And the reason that is absolutely important to me is that to me it is a breaker. It is a bullish breaker, and the reason is that look at the entire area here. Look at this range. In this range, what we had was that after a drop, after a 3 taps, we had a rally taking off this high and this high. However, when the price came down, found some support here, looked like a Quasimodo or something, then rallied, couldn't pass over this high and dropped. And when dropped, something happened. What has happened is that if you look at the low of this candle, this one, you can see that on this side, this drop has not reached to the low of this candle. Let me mark it. It will be much easier. Okay. Like that. This low is 100.290 and this low is 100.360. So before taking this low out, we had another low very close. So there are relatively equal lows. Then we had a rally and a drop. But what kind of drop? This drop looks to me like a very clear red on liquidity. So absorbed all the liquidities, all the sell stops under this low, and then we had a big rally. We took out this high and this high. Correct. Reached out to some level of supply, if you can call it supply, if you want to, and then dropped. Resistance, whatever you want to say. Bullish order block, doesn't matter. The name doesn't matter. And try to fill up this fair value gap. This one here. Came up, hit this shadow, almost 50% of this shadow here, and the low of this up close candle, and then dropped, right? So it took out this low, and there is a very small low here. If you see, there's a high, low, and higher high. So there is a low here. Let me clear this. Now you can see it much better. And that low is also taken out, so it's pretty much, I mean, enough that the price starts a new rally. However, this one is not touched. This is a bullish breaker. The reason is that we have a low, a high, a lower low, and then a rally. And what has happened is that this lower low took all the liquidities under this candle. Okay, so therefore this becomes very important and could be used as a potential buy level for me. Let me change the color. Okay, this is my breaker. So there is still a okay, now get back to here. Remember this daily gap, daily opening gap. Price rallied, try to hit this fair value gap here. We are in daily. Try to hit this fair value gap here, but I believe it couldn't. It couldn't. So that fair value gap is untouched. By the way, price tried to get out of this gap here, could not hold, and dropped heavily. One more try, again dropped. Took out this low here. There are still points that could send the price lower. Correct that we have also a breaker here, because this is a low, higher, high and lower low, but this low here didn't grab some liquidity. So I mean the breaker that is not taking out an important low, old low, it can break. As you can see, when the price released from this high, we had another tap, another tap, another tap, perhaps, yeah, this one as well, another tap and another tap. So numerous times it hit this breaker, right? Correct that the body, which is very important, the body of the breaker is the most important. It is touched just like one time, right? It can be touched again, right? There is still this possibility that the price drops, comes all the way down, and takes itself to this one here, which was our breaker. And if we fine-tune this breaker to the daily, then we will have this. That would be our breaker. So there is this potential that the price keeps dropping in US dollar index until it gets to the level of like 100 and 100.8 perhaps. Let me see. Best is to take this high. This high is 101.835. So I'll mark it down here. That's a level that would be great to have a reversal. As I said here, yes, we still can have a reversal here, right? But I mean, it's unnecessary that the price reverses from here, because this reaction hasn't been that much strong, right? And number of taps under this low, I mean, like, I prefer to see there is one tap and two taps. This one was not really big one. So perhaps there is another one, unless I see a very clear bullish trend, which means what? Which means unless I see this, something like that, and again taking out this high and stays above this weekly opening gap, this small one, that will tell me that the trend is reversed, because right now in daily, as you can see, it is absolutely bearish. It is absolutely bearish, and I have got no signal, absolutely no signal to go for longs in US dollar index. Having that said, that I'm still expecting that US dollar goes lower. It means that I'm expecting euro to go higher, and there is a ratio between the movements of US dollar and euro dollar, and that is something between 1.1 to 1.2 times the steps that euro to dollar takes, comparing to the steps that US dollar index takes. So if US dollar drops by 180 pips, US dollar drops by 180 pips, it means that euro should drop by 200 to 220 pips. Okay, 180 reflecting to euro will be, euro should actually rally for 200 to 220. Therefore, let's get to euro. So I'm expecting dollar to keep coming down, and this is our euro dollar. I'm expecting euro to keep going up, and if euro wants to keep going up for 200 pips, that's the 200 pips, 1.1025. So I mark 1.1025, and of course 20 pips above that, because I said 1.1 to 1.2, something here. Yep. Okay. So an area like that, and again, this would be our breaker as well, because if you see, there's liquidity here, this takes out liquidity, and then a big drop, and that makes our breaker. which is the last up close candle. Why I take this one, not this one? Because the body is important to me. This body here in the weekly time frame is the one that I look at, right? So this would be the most desired zone that I think about being seller in euro, dollar. On the other hand, if we go to daily, then let's see what we have here. Okay, it was an important high. Then what we had here was that we had a high, had a low, we had a higher high, and then drop. And when we have a high and low, higher and drop, there must be a breaker. If we look at this high, high, low, higher high, and then drop, you see these candles and you see this one. All these four candles together could be considered as our breaker. So I can fine tune this one. To this here. Okay. All this. But if it is going to work, usually we shouldn't see the price going over 50% of the breaker. I believe 50% of the breaker is an area around the open of this candle here. So that would be the fine-tuned area. And you can see that the area that we consider like 200 to 220 pips, the reflection of the euro-dollar movement to, US dollar index movement to euro-dollar would be here. So if price gets to here, I think about selling right now, according to what we spoke about US dollar index, that we expect it still going down. So I expect euro to go up, and therefore best scenario for me is that I see that it goes down at least to 50% of this shadow, which is 48 pips, and then I'll be looking for some opportunity to go long on euro dollars, and that's it, unless the price action proves me otherwise. So I believe this could be the way to go, the scenario for the new week. Okay, let's get to gold. The gold to me doesn't have a technical analysis because it's just going up, right? And something that is just going up, I mean, they sell it, and this sell is just another buy opportunity. You can see, right? I mean, it's monsters that it's like that, you know. And gold is connected to many things. It's related to the Ukraine war. It's related to the Iran nuclear issue. It's more importantly related to the strategies of President Trump against China, Europe, Canada, Mexico. Everybody is fighting right now. And when everybody is fighting, gold just goes up. That's it. So I'm not going to speak about gold because, it's all-time high. What can I say? Unless we see some changes in the politics, it will keep going up. Everybody around the world is buying gold, so it doesn't come up. come down. I mean, even if this low is taken out, it doesn't mean that the trend is changed. So personally, unless I see that the situation is going to calm down, I would buy. Just buy gold. Buy for any reason. This low is taken out, buy. Saw this fair value gap, buy. Saw this order block here, buy. I mean, this low is taken out, buy. That's it. And about the Bitcoin, Bitcoin is a different story. Bitcoin, you see that this big gap here between the week starting from 3rd of November 2024 and the week starting from 10th of November 2024 is filled up. That is pretty filled up. Yeah, almost completely filled up. However, the price is not tending to start a new rally yet. So my understanding is I'm not going to buy here. I'm not going to buy here because it was all, I mean, excited. No, they were excited. This is my understanding. It's not the way to trade, right? Especially Bitcoin, because very volatile, huge spread. And so where would buy it? Where would I buy it? Well, I would say that I prefer that I see at least this low taken out. And why is that? Because I'm looking for the order block that is responsible for taking out this high here, right? I mean, those people that have purchased Bitcoin here, they are like in profit to the neck. So, I mean, smart money doesn't work like that. The people can't make money like that. I mean, smart money doesn't allow people to make money like that, right? So they have their stops if they have any stop, it must be taken. It must be taken, right? So 50% of this shadow, this long shadow here, and you see this shadow here, just touch this one here, you see it, right? Just kiss and fly. That's a kiss and fly. The 50% of this shadow is met by this candle here. Therefore, if the price starts dropping, at the moment, I see it more probable to happen comparing to starting a new rally. And all these shadows here, right? And then this big body candle is telling me that drop has started, right? And I can't see the politicians supporting Bitcoin again unless Mr. Musk says something or Mr. Trump says something. It should come down. It should take out those people that are in profit to the neck from this area. If you remember the time that this happened, right? Elon Musk sold a lot here. Then when that high was taken out, lots of people said that, oh, okay, resistance is taken out, so it's just going to go to 100, 150,000. And they start buying, and smart money was selling, and guess what? Dropped, took out this low, stayed there for a very long time, right? Accumulated, and then it started another rally. Right? So the overall trend, of course, it's bullish, no doubt about that. But smart money is not just bullish. An example, let's say, my understanding is that the smart money in gold is just it's not that smart. No, smart money is this one that takes out the low. It takes out the low, shows rally, drops, takes out the low. No, shows the strength, drops, shows the strength, drops, again drops. This is a smart money. So my understanding is that because this is already touched, because this 50% is already touched, what remains here that takes my attention to is this little gap here, right here. And this fair value gap, this is untouched. This is untouched. So anywhere this one is touched, you see this gap here is filled out. So, and 50% of this shadow, if I mark it, it is here. So anywhere. I believe somewhere between $40,000 and $43,500 for Bitcoin would be the place that I think about being a buyer. Otherwise, I just watch. I'm not going to sell Bitcoin. I don't trade Bitcoin. I don't trade. I mean, I'm not that brave. I'm not that brave to trade Bitcoin. I'm just analyzing it. I trade euro dollars. I sometimes trade pound dollars, but Bitcoin, no, I'm not trading that. But from technical point of view, from my understanding of the smart money concepts, if there is a good place to go long in Bitcoin, that is it, right? And now the point about that is this. Guess what? This is that 71%, 43,000, which is absolutely in the discount area. Here, if I want to trade, I would sell, but I don't trade. But here, yeah, I think about being a buyer, definitely. Thank you so much. Thanks for watching, and I appreciate if you leave me a comment if you would like. I will be happy to read them and answer if I can. And subscribe in the channel if you want. There will be good live trades. I will be starting speaking, because I created content with the live trades in euro and other assets, other instruments, but it was all in another language. I have started English versions as well. So welcome. Thank you. Bye bye.